Welcome to another Simple Invest video. So today I'll be going through my analysis of the trades done on 18th of December 2020. And let's go ahead and take a look. Okay, so for now, my analysis will usually start at when the server time is 2 a.m. onwards. That means 200 hours onwards from the server time, because at this server time, this is usually 8 a.m. for me. So this is usually when I wake up. So I'll be basing my analysis based on when I could possibly trade, which is when I wake up. Okay, so this is why I won't look at when the server time is 0000. I will instead try to analyze it from 0200 onwards. Okay, so from here, 0200, this is, I think, a minor breakout, but I think I probably wasn't awake at this time, or I didn't catch it. So instead, the time which I actually saw this breakout was quite late. That means the breakout had already extended into this range, and then I entered the trade. So it was quite a big risk, because my strategy is actually to enter the trades as early as possible, as early in the trend as possible. That means once I detect a breakout, the first breakout that breaks out of a significant support or resistance line for that particular day, or for that particular time, for the particular last few hours, I will enter the trade. So in this case, I entered this trend quite late, then I entered it around here at 310. But I was very fortunate that the swings didn't take out my stop loss of 50 points. So it just swung to about 31 points against me. And then it started to go up again. So it seems like it's going through a wedge formation. And this is a bullish wedge formation, because you can see that the lows are going higher and higher, while the price is testing this significant resistance level. So it tested once, tested twice, and tested 3 times. And after that, it broke through on the upside. So you can see, if you use a arrow and draw this, there's a wedge shape here, something like a triangle. We call this a wedge. So this is a bullish wedge. Quite a typical formation. Then this is a good sign. So it broke through on the upside. And my take profit target is 200 points, which I believe I achieved it. Not here. Then you continue to go uptrend, maybe around, yeah, around here. So I took profit here, 200 points. And after that, yeah, the price started to go into a sideways trend and started to go into a downtrend. So let's take a look. Actually, for downtrend, this would have been a good point to enter on a short trade, but I didn't. Instead, so okay, I did notice this breakout on the short side, so I didn't enter. I didn't notice this at that particular time. I probably wasn't looking at the charts, so I entered it about 20 minutes late. But eventually, this trend didn't hold on, and the price swung up, and I got stopped out. Okay, so this is a stop. So this is a loss. So this looked like a bullish trade. This seems to be a sign to enter a long trade, but because I kind of held back on it, because I either wasn't looking at the charts, or I didn't feel confident about this trade, this trend, which is true, because if I entered this trade here, a long trade here, that means a buy trade here, would have been stopped out. Yeah, something tells me like today's that particular trading day's trending moves wasn't very strong, and this kind of move kind of felt very suspicious to me. Like, I didn't feel like it could last. Like, I was looking at that particular day, and there was quite a bit of like zigzag moves, a bit of whipsaw as well. So I wasn't very confident that this move would last. And add further to the fact that that was Friday. Sometimes I noticed that for Fridays, price moves sometimes aren't as strong. There's a lot more whipsaw in the prices, but it is not a consistent observation. It's just sometimes that I noticed that sometimes on Fridays. Oops. Let's go back to that. Okay. Okay, so there was a loss, and this would have been a good time to short as well, but I didn't. So I missed out on this. And was my next trade? Okay. So I missed out on this short trade. So if I entered here, a short trade here, that means sell, would have taken profit. Yeah, would have taken profit. So instead, I missed out on this. I probably wasn't observing the charts or something. So I missed out on this and I entered the trade here instead. Whereby this is a breakout on the long side, that means a buy side. And I entered this and I think, yeah, so you can see that the price zigzagged a bit and it swung out, it touched my stop loss. So I got stopped out. Eventually it went downtrend. And I think I stopped trading at this point. So I had 1 win and 2 losses. So I think I told myself that 3 trades is enough for that particular day. And looking at this timing here, this is already 17:15. So in my local time, it's already like 11 plus. So once I got swung out of this trade, I went to bed because it was already at 12. Probably it was close to 12 that I got stopped out of this trade. So I went to sleep and I didn't trade anymore for this particular day, which was good as well. You can see that the price went into a really flat sideways trend. And that was it. So that was the trading analysis for Friday, 18th of December 2020. Some lessons maybe I could have taken from this. Try to monitor the charts better and enter the trade sooner, because I didn't get punished for entering this uptrend late, but if I entered it earlier, would have been more secure in taking profits. The trade would have been more secure. It would have been less of a risk of getting stopped out. And this on the short side, yeah, just that the downtrend didn't really hold. It wasn't really strong, but it wasn't a mistake. I was still following my strategy properly by entering a short trade here. And I missed out. So I didn't monitor the charts again. I missed out this short trade. This was quite an obvious short here, because it broke out of this support level from these 2 points here and here. It broke through this support level and broke through this zone as well. So this is quite a significant, quite an obvious short trade, which somehow I missed out on it. So if I entered this, I would have maybe squeaked in exactly the 200 point take profit, maybe. I mean, if I entered a bit late, like, might not have taken profit of that 200 points. And finally, for this particular one, yeah, this is still an okay trade to enter on the long side, just that, yeah, it's just one of those times where the trading day came to a close, because I remember this was a Friday. So you can see that trading activity very quickly came to a close here, because probably people were going away from the markets. It was Friday. People were taking an early time off. Like everybody was going home, going to rest for the weekends, and so on. So Friday late in the trading cycle on Friday nights is usually not a good time to trade. Anyway, for Friday itself, normally Fridays, sometimes I notice that there is more whipsaw action, like the price moves are generally weaker, but it's not a very consistent observation. But definitely, I can say for sure that towards the tail end of Fridays, normally price moves are a lot more on the flat side. There's very little volume of price moves. And the logical reasoning for that is that most people are going home to rest for the weekends. So they're going away, they are leaving their trading desks for the banks or the major traders and so on. And yeah, so there's just not much trading activity. And you can see that it's very obvious here that from this zone to this zone, it is totally flat, right? It's totally flat. From here onwards, from here to here, totally flat. Because it's the last few hours of the trading day for Friday. and a lot of the people are already out from their already home, already not at their desk trading anymore. Okay, so thank you very much for watching, and we'll see you guys for next time.